right, hey there, traders. Sam here. I'm back with another in this series we're doing where we're kind of digging into particular components of Algo Studio Pro. Today, the focus will be on the optimizer. And this is really oriented towards those of you that may be doing a trial of Algo Studio Pro, or you made the investment in it, and we get a lot of questions about how to best work with the optimizer. So I've just put together here, this is a very, very rudimentary algo. It's all based off of, these are all free indicators. I try not to load it up with a bunch of our particular indicators because I don't want you to have the misperception that you have to work with our indicators, right, to get a good algo here. That's not the case here. So I've just got the up-down volume here. I've got the native, this is Native Ninja, the Native Ninja CCI. This is not native, but it's off of the Ninja forum. It's just an OBV with a moving average associated with it. It's the OBVM if you wanted to look for it. You probably just Google it and find it. Okay, but let's just look at this right now. Obviously, right, if we look at the equity curve, it's pretty good results here. Now, yes, it has been optimized, which is what we're going to talk about. So as for data, now this is somewhat of a personal preference here. Now, you could run an optimization here off of 90 days, right? You're certainly going to have a better sample size. My suggestion here, and again, this is just based off of my own experience working with it, I like to do about 21 days, and then every 21 days or every 3 weeks, I like to re-optimize. Volatility changes, conditions change. So I don't want to get married to something that, granted, 90 days is more ideal for optimization, but because we think it's a good idea to consider re-optimizing on a regular basis, I think this is a good starting point. In addition to that, when you're working with the optimizer, if you load up 90 days, and in this case here I'm working with a 34 range, the optimizations are going to be very time consuming. Now, in general, they are time consuming. So it's the kind of thing you want to do, certainly when you're not focused on trading after the market closes or on the weekends, or just when you have the time, or you can run an optimization in the background and be working on something else, because they can take time. And certainly that's a function of how complex the algo is that you're running, and the number of generations. We'll look at some of that as well. But this is very simple, and again, I'm just running off of 21 days here. So you can see I'm loading 21 days, but it's only trading on 16 because this is including weekends in terms of the total number of days it's going to load. So trading days. So essentially, I've got 2 weeks of trading data, and I find I don't think anyone would be unhappy with that kind of result. Now, that said, these are one lot trades in the MNQ, micro NQ, on a 34 range. Nice looking results. Now, as we always have to say, right, back-tested results here are no guarantee of future results, right? We can't. That's just the reality of trading. But this would certainly be a good starting point, and something that you could run relatively comfortably, based on the assumption that most of you are running prop accounts, which fully understand, right? It's very attractive. At this point, I think, is there anyone not running prop accounts? Right? They're so popular, and it's such a good way to test outside of a sim account. I'm going to make the assumption that this will be oriented towards the vast majority of you that are running prop accounts, and it could be multiple prop accounts, which this lends itself to. And the most popular prop account is the 50K account. Now, just to be clear here, I don't want to make assumptions here, but a 50K prop account with, say, which would be fairly typical, would have a 2,500 either a trailing drawdown or an end of day drawdown. If I would encourage you to seek out those prop firms that offer you an end of day drawdown. You'll have better probability of success there. Likely you're going to pay more for those. So Apex, of course, is a very, very popular prop account, but that's a trailing drawdown, right? And that trailing drawdown can really bite you. It's the end of day drawdown, I think, is preferable, but you're not going to get a $20 prop account with that. So just little suggestion to consider. They're certainly out there. We've got a few. One in particular we're working with. I'll put a link underneath for those of you that are interested in those end of day drawdowns, right? I think they'll be more accommodating to working with an algo like this. So let's just quickly review the algo. It, again, is drop dead simple. I've got a Keltner channel, a 21 period Keltner channel with one one ATR on either side of it. Middle line is a 21 EMA. The up-down volume here, because I'm using volume in this algo. I've got, and again, the native CCI. I'm just using a break above the zero line, right, for that push from 0 to 200. As we often see the market, we often see reversals when we get above or below 200. So I'm using that for entry and exit. And then this is the OBV. It's a 5-period OBV with a 5-period moving average of the OBV. Now, how did I get that? How did I come to a 5x5? Well, I ran the optimizer on it. So let's bring up Algo Studio Pro. Here it is, and we'll look at this. Now, some of you, like the designer, I know my partner TDI Dev, he prefers to work here. I can go back and forth. The more complex it becomes, I think it's advantageous to work here in the designer, particularly if you're doing sequences and you're stringing things together. For something like this, is so basic, right? I think it's pretty easy to come over here and work with the logic. So just to review this and bring this over a little bit, what I'm doing here, again, it's drop dead simple. So close is greater than the high of the previous bar. That's a pretty easy one. The volume is greater than or equal to the volume of the previous bar, right? Greater than or equal to. The CCI is above the zero, right? Is above zero. The OBV and the OBVM, the moving average, the OBV is above the moving average. And that the close is greater than the Keltner channel's upper or lower bands. So again, very, very, very simple. Now let's go over to the ATM and take a peek here. I'm running this on the RTH session here. Let's see, I think pardon me. Let's go to the full RTH because I want to make a point of that, of showing you the difference here. So let me just put back here the RTH. This will take just a second. There we go. All right, so now I have from 9:30 to 4, right, the cash session. And you can see here right now a little bumpier here, and we'll look at that in a second as to why that's the case and how you might tweak that. Now I'm using the initial stop loss here is being tallied per the optimizer here. It's using swing strength of 12 plus 11 ticks. This is just a warning that if it can't find this clearly here, if price is above or below it, it will not take the trade, right? It's just a little heads up that you may spot something here and say, oh, why didn't it take the trade? Well, if the market had moved beyond or below this particular setup here of the previous high, low, and the strength of 12 plus 11 ticks, then it will skip the trade. That's all that's telling you here, right? You're going to get the majority of them. Down here, as you're going from ATM to optimizer, a couple of things to pay attention to. We talked about this in some of the last videos we've done. We now have opened this up here, so you've got at bar close, previous break, a break of previous high or low, and then a limit order. Now, I'm using at bar close here in the optimizer, and that's one of the reasons that I'm working with range bars here, because ASP is going to enter at the close of one bar, open of the next. So because of that, that's why I'm using range bars here, because I don't want a giant candle. You know, if I was running a 2-minute or a 5-minute, I might have a very, very large candle. I don't want to enter at the top of that candle or the bottom of that candle, as the case may be. So thus the range bars here. How did I come up with 34? I just a little improv, right? I just chose a fib number and thought, okay, well, let's see how this goes. And the results were pretty good. So with that said, now, a couple of things for a point of clarification. If I click here at close all trades at the end of session, that is indeed going to mean it's only going to be operational during the cash session. This is also important here. At an opposing signal, do I want it to close the trade, reverse the trade, or do nothing? Now, that can change the results pretty dramatically. Here, let me pull this over here and just show you this. Right, so in the context of the experimentation, you're tweaking, you're looking for a good result here. This might be the kind of thing you might say, well, let's see, what if I reverse the trade at at the opposing signal? Oh, almost hard to believe that the difference is that dramatic. Yeah, well, of course, one of the things you just noticed is one of the unbelievable strengths of Algo Studio Pro is that I get that real-time feedback. Right, just that little tweak, I went from a beautiful-looking algo to a terrible-looking algo. Just from that little change. Now, what if I did close the trade? See if that improves it at all. Doesn't look like it's going to improve that here. Let me pause that for a second while that resets here so you don't have to sit through it. There it is. No better. In fact, just as bad. But if I go back to do nothing, now all of a sudden I get back to, oh, here, let's pause. There we go. Now I get back to this nice looking result here, just from that little tweak. So you start to see how just the tiniest little adjustment can dramatically affect your algos, right? Just something to pay attention to. You want to be mindful of these and check all of the above. I would do the same thing here as I did. Is the result better if I go bar close, previous break of a previous high or low, or a limit order? And if I do a limit order, that's going to be, at the next bar. I could do it. Let's see, I'm going to get a result here if I change it to limit order. Okay, so there's a change to limit order, plus or minus 2 ticks within 1 bar. You want to trade that? I think not. So just so you understand that, if I go to, let's go back to bar close here, which I think lends itself, because this is a momentum-based algo, right? We're looking for that push outside of 1 ATR per the 21 period. And I'm looking for that momentum push, right? And then I'm using the CCI, or a change in the OBV here, as an exit, right? So if we get oversold here, i.e. beyond minus 200 or above 200, you'll see it's very consistent. The market will tend to reverse there. So I'm using those for the exit. So all of that said here, now I've got a decent setup here. This is the result of an optimization. Now I'm going to go over to the optimizer and just take a look at it. Now, when we come here to the optimizer here, you've got a lot of choices. When we look at our drop-down menu, our menu here is giving you all sorts of different choices that you can optimize for. But the most common one that people will go to, they'll go right to net profit, which, okay, right, it's a good place to start. Let's see how that looks at net profit. But what I want you to keep your focus on, and understand that, again, let's use our 50K prop account. It's completely just it's really a mislabeling here. It's something that the prop accounts do for the, I don't want to say naive, maybe the inexperienced. You are not, under any circumstance, you are not trading a 50K account. You are trading an account based on the size of your drawdown. So for a 50K, let's use Apex as an example. They're so very popular. So for a 50K Apex account, you're trading a $2,500 account every day, all day. That's all you're ever trading. You are not trading a 50K account, right? So let's be clear about that. I'm assuming most of you understand that. That trailing drawdown is what you're trading, right? So keep that in mind when you start putting together an algo and you start thinking about the size you're going to trade, the risk that's appropriate here, and what the drawdown is. So I would propose to you, those of you, again, assuming the vast majority of you are trading prop accounts, the only number that matters to you is max drawdown. That's the only, well, let's see, we're right here. Max drawdown here on this particular algo is $358.80, and that's after fees. Right, commissions included. This algo has $1,000 in a little over $1,000 in fees over those 16 trading days. I mean, it's trading a lot, right? 16 trades a day is pretty good number of trades. You can reduce that, right? You can start tweaking you can start limiting number of trades per day and start experimenting with what kind of results you get from that. But the key point I want you to focus on is that when you're running an optimization, assuming you're working with prop accounts, the only number that's important to you is max drawdown, right? Can it sustain and withstand, in Apex case, the trailing drawdown, right? Because you can be way up here, look at this thing, go, oh man, for one lots I'm up $2,000 here, but if it has a trailing drawdown that's going to blow your limit, all these other numbers are meaningless, right? All that matters is your is your max drawdown, right? So this is a good looking algo because it has a very low drawdown, right? And it has a very nice result. Again, it's a lot of trades. Right, you could start tweaking and play with that a little bit. Win rate is very high. Now remember, this is one lot micros. So careful though, right? The tendency would be like, oh, what if I change it to 2 or 3 lots, right? Well, again, see how that's going to affect your max drawdown, right? So I would always encourage you, particularly for prop accounts, you want to have a very large cushion between what the algo is showing you on max drawdown and whatever prop account is you're using. Again, whether it's trailing or intraday trailing or whether it's end of day, you want to have a very large cushion there to avoid blowing up your accounts repeatedly. So with all of that said, let's move over here to what we've done here. Now I ran the optimization on this for daily net profit, which I will often use. Not to discourage you from experimenting with all of these, but probably the two that I use the most, let me rephrase that to 3, would be net profit, daily net profit, and the Sharpe ratio. And we're going to look at daily net profit and Sharpe ratio in this optimization little video here series that we're doing here. Now note here, I'm putting max drawdown to 1,200, again on the assumption that you've got a $2,500 trailing drawdown, and I want max loss to be no more than 350. Now that doesn't mean that you're going to only get an optimization result here that's going to be within those parameters. What it means is it's going to attempt to find that. If it can't, it's going to mark those in red so that you recognize that, oh, okay, it couldn't find an algo within those parameters, right? So you might go back to tweaking and testing, see if you can find a better result. Those are just guidelines for the algo. Again, we're doing this on 1 lot. Now, in the ATM, I could come over here. I could add a position. I could add a position to this. I could add 2 positions to this and have it optimized for multiple positions. Here, it's adding a second one. I could add another one. I could try and spread this out. But my suggestion is when you're first looking for a base case, right, to work with here, I would keep it to just 1. Can you get a good result with just 1 lot? And then if so, perhaps you consider increasing the number of contracts. And then, once you're comfortable with it, maybe you start experimenting with a scalp and a runner and see if you get a better result that way. But this is always a good starting point to just start with a single. Most of you, I would encourage you to start with a micro, just 1 single micro, and see what your result is and start scaling up accordingly. From that, now let's go back to our optimizer. A couple of questions that come up. If you in the ATM over here, if you set it to close all trades at the end of the day, when you come to the optimizer, I made this mistake initially. You don't want to click that optimize close at the end of session, because what it's going to do is it's going to override what you put in the ATM, which is closed at the end of the session, and it makes that optional. So it's going to consider results here with or without close at the end of the session. So this is redundant here. You don't need to add that unless you were over here and you had chosen outside of the cash session hours, maybe using London hours, right? And so you're going from pre-market to London's close. That might be a time where you would want to do that. But the majority of you are working off of the New York cash session, the RTH that you've done here is probably going to be enough for you, right? It's up to the individual. I'm just saying there's a right way or a wrong way. The point being, if you click that, you are telling it to consider trades outside of the cash session. That's hard to say, cash session, at least for me. Optimize trading hours. I don't want to do that because I've already told it I want it to focus only on the cash session. Now, do I want to optimize the indicators? Well, that's where, if we come over here, if I click that, these are the optimizer settings. Here are all the choices, and that's how I ended up with a 5.5 on the OBV and the moving average. I came over here, which is something you can do, right? It's often a good starting point. If you just pulled up a CCI, or as I did here, OBV, you could say you could just put that one indicator on, or multiple. It's up to you, but I often will do them one at a time. It'll just be faster in the optimizing. I'll just put that on and say, okay, well, here's the range I want you to test for. I want you to optimize this 21-day 34 range MNQ chart. I want you to optimize the OBV and the moving average associated with it over that period of time. Tell me the best result. And that's how I ended up with a 5.5. Of course, you can do the same thing with the CCI. Exact same thing with the CCI. And same thing with the Keltner channel. I just happen to like a 21 Keltner with 1 standard deviation, so that's what I did. Now, so I've left that here, so there's no need to go again, although that's always an option for you. Now, over here in the optimization here with a micro like this, I think in the default here, these will all start at 4 ticks, 4 ticks. Here 4 ticks for a trailing stop. Because it's a micro here, we don't want this. We don't want to stop that's tight. And the same would be for the full size, right, or for the mini. The default is 4, which may be appropriate in some case, maybe for the S&P. But for the MNQ, something with that kind of volatility, that's way too tight, and you're going to get a result here that will be something you would not experience in real time. So for an MNQ here, I move these up to 10, right? Just a suggestion, right? Again, 10, there's no magic number 10. It's just what I'm encouraging you to consider, because we don't want to have results where it's in, out, right? Where every 4 ticks, right? The NQ is way too volatile to keep it to have this set at 4. So I would take it up to 10 on these for your initial targets. Same with a trailing stop. Trailing stop trigger, okay, you could leave this at 4. Yeah, I'd probably do the same thing, change that to 10 just to show you here. And now it's going to optimize every 5 ticks, right, every 5 steps here between 10 and 100. Risk reward, that can be a little tight, but again, it's you might do a little testing, see what works best for you. Same thing here, down for the stop loss and ticks. I always move this up to 10 on the MNQ. Now, so for the optimization, the only thing I'm optimizing for is the ATM. I'm not touching any of the indicators here. So with that said, now you can see the result here that I ran. So I just save you from sitting through the optimization. I ran that before I started recording the video, so you could see the result. Oh, okay, that's pretty good. I mean, it's not bad. Max drawdown 358. But now, one thing you always want to consider. We know there's different volatility periods of time throughout the course of the day. So the first thing I always do is go over to the reports and say, okay, we'll break this. We'll break it down in 30-minute increments. You look here and say, well, how does this do over the last 16 trading days? Well, obviously, it doesn't do particularly well after 2 o'clock. So immediately, the first thing I would do is come over here and start clicking off anything after 2 o'clock. And see what my result looks like here. And it's going to take a second to retally this. I don't want that one either. So I'm going to run this right up to 2 o'clock. And what does that do for my result? Let's let it process here for a second. Push this off. Now it's starting to smooth out. Now I've got a slightly higher number here. Again, where's the first thing your eye should go to? What's the max drawdown here? It almost didn't budge, right? So all I ended up with here is a better P&L, a better net profit here. I didn't have any dramatic change to my max drawdown here. Look at the average win-loss here. They're very small, right? Biggest winner, 225. Biggest loser, 140. That's very, very reasonable. These are a little smaller than I'd like, but again, this is one-lot micros. And again, I would suggest that there'd be very few of you that would be disappointed with that result. Now, let's take a look at the trades here just for a second. Now, I've disconnected from data here. I'm recording this. It's about 2 o'clock on Thursday. Take a look at something here that is worth noting. You can look here at this trade here. Let me grab an arrow. We look at this trade here, and we can understand why did it take the trade. Well, okay, CCI was above 100. Here's the little volume is increasing. The OBV is above the moving average, and we're outside of the Keltner channel's one ATR. So you understand why it takes the trade. Now you look at how this trade ends up. Now you look at this and you go, oh man, I'm not going to sit through that and that and that and that. No, it's tempting to if you're watching it trade, which it's just human nature. You're likely to want to do that. It's tempting to look at this and go, oh well, come on, I mean, I'm going to get out here. Right, I'm not going to stay long through all of that. And if I'm right here, oh well, I'm going to get out. Oh, but see what would be typical here if it came all the way back here. Oh, keep going. Maybe it's going to keep going, and then you're back down here. Oh well, I'd get out here. Eventually, it gets out here, right? We see the CCI get over 200. It gets out, and you can see your worst case here would have been a stop loss. Almost gets stopped out of $140.49. That's your worst case here. My point being, if you're going to let the algo trade, let the algo trade. Because as soon as you start fussing with it, right, you're not going to get these results. Now you're doing your own thing. If you want to see those results, you have to stay hands-free. Or let me rephrase that. You have to stay hands-off. Let it do what it's going to do. Now, you can reevaluate if your results came out of the chute and you had, much worse results. Perhaps you come back to this and start doing some tweaking. But over a 3-week, in this case for 16 days, test period, you want to let it do what it's going to do, because for all you know, right, that ends up, this ends up being a big winner. Right? You don't know. It's always easy in hindsight. Well, of course I'd got out here. Oh no, of course I'd gotten out of break even here, and of course I'd never sit through that. No, that's not that. Don't think like that. If you're going to let the algo run, let the algo run. Right? That's the only way you're going to see results that will be similar to this. Again, otherwise you're just doing your own thing. Okay, let's go back to the optimizer. So you look at that, but just don't. If you see that now, what you want to be careful of is if you see trades that are going, from the open to the close, and you might want to reconsider the algo that you've got, or look at ways to prevent something like that happening. It could be number of bars you allow the trade to stay open. There's a lot of ways to tweak that. This is, again, such a rudimentary example here. I didn't want to get into any of that because I just wanted to show you don't have to get super fancy to get a great result like that. I mean, again, I don't think any would be unhappy with that result. So let's go back to the optimizer here. Again, I ran this on daily net profit. I gave it these guidelines, and that was the result. And then the first thing I did was go to reports, say, is there a particular time of day where there's a block of time where it's unprofitable? What you don't want to see is something like very profitable at 10 o'clock, nothing until 1 o'clock, and then you got a little squirt at 3 o'clock, right? You want to see blocks of time where it's consistently profitable here. I mean, this is not the best I've ever seen, but it's certainly acceptable. And by cutting it off after 2 o'clock, you're reducing that drawdown tail end of the day. The next thing you want to do is go to the Monte Carlo. And what we want to see here is a nice tight cluster, which this gives us. Right? We don't want to see it all over the board. This is, I've seen better, right? But this is certainly a good starting point. And I want to see very low probability of risk of ruin here. So I've got all sorts of different results here that you can see it here, and the max drawdown is very consistently within the range of a trailing drawdown. So this is a very good sign. Now you can start doing some tweaking here. You could add another tick of slippage. By default, I think I have 2 ticks of slippage. You could add another tick of slippage. You could skip the top 10% of the trades. See, what does that look like? You could skip the randomly skip 5% of the trades. Does it stay tight? Does it stay consistent? Do you stay within the risk of ruin here being very, very low? Those are all things that you want to keep an eye on. And I kind of go in that sequence. I start with the ATM, then I go to the optimizer. What am I optimizing for? I personally, right, again, there's no right or wrong way to do this. I prefer not to use stop loss with the optimizer. I want to let an indicator, in this case I'm using the CCI above or below 200, plus 200, minus 200. I want an indicator to take me out. So I don't get some sort of crazy trade that runs from the beginning, 3 days later it gets stopped out. This is my personal preference, right? I'm not suggesting you don't test or do a little A/B comparison with the optimizer using a stop loss and then using an indicator to exit. It could be a break of a moving average. It could be some price action combination that wants to get you out. Again, there's lots of different ways you could be exiting that would be determinant rather than letting the algo or letting ASP and the optimizer set your stop loss, or to just randomly pick one yourself. Suggestion, nothing more, right? A starting place. So when I'm optimizing, that's generally all I'm ever optimizing for is the ATM. And then what am I optimizing for? Now, so daily net profit gives me a decent result. We went to the reports, took out after 2 o'clock, and again, I'm pretty sure that very few of you would be disappointed with that result. Now let's go over to a different. Let me close this here, and I'm going to bring over a different algo with a different optimization. So you can see this one. Oh, pardon me. It's the same algo, but it has a different optimization. Still a 34 range, still on the MNQ. Here's the same setup. Exactly the same. So what's different? The only thing that's different is what I optimized for. So again, you'll notice all of this is exactly the same. We're running, I should have gone through some of these for those of you that are new to it. The number of generations, I'm doing 100 generations. You can tweak that, 300. Many people will do 300. It just takes longer. Right? So again, that's why when you're running optimizations, you don't want to necessarily sit and watch it run. 300 generations might take 15 minutes, right? So you want to be doing something else at the same time. Just let this run in the background. You can start putting in some numbers here. Minimum number of trades wanted. Well, total trades here is 223. For a sample size, typically I'd like to see 100 trades. It's kind of a benchmark here. I had running without this minimum number of trades just left blank or zero. When I get a result here, I know I got plenty of trades, right? So I've got a good sample size here in terms of the number of trades that I'm working with. Minimum, maximum number of trades. Again, you might do a little trial and error there. Minimum profit factor. I don't care about the profit factor. What I care about is as I said, the max drawdown, right? High win rate. Okay, great, right? But that's not a focal point. If the win rate's 35%, I'm fine as long as I'm fine with that. That's not a priority for me as long as size of winners to losers and max drawdown are favorable. I don't need that. Again, my personal opinion, right? So if you prefer to have those, you want a 70% win rate, well, go for it, right? You can optimize for win rate if that's important to you. To me, it doesn't matter, right? What matters to me is max drawdown and what the biggest loser and biggest winner look like. That's what I want to see, right? Because I know that most of you are trading with prop accounts, so I want to keep your focus there. It's just point of note. It's very easy, particularly if you go to something like the ES, to get a massive net profit, right? 10, 12 grand over a month or more. But be sure to check the max drawdown, right? Because if that's 5 grand, there's no point in running that algo, right? Because you're going to blow out long before you get that result. Now, if you're trading with a cash account, if you've got a 100K account and you want to run something like that, and you're comfortable with a 5K drawdown, different story. But since that's a very small percentage of you, I'll keep you focused on max drawdown. So all I ran here was for Sharpe ratio, which what it's going to do is try and smooth it out. So we have lower left to upper right. You're looking for a nice smooth line. Now, if you're not familiar with Sharpe ratio, I won't get into the details of it. Just Google it or ask your AI. It's just trying to smooth out the equity curve. And that's exactly what we get here. Look at this nice equity curve. Now, it's not that much greater than the last one where we went for daily net profit, but it's nice and smooth. Now, if I come back here and remember the sequence, I'm going to go over to reports. I think I left this at RTH. Let's take a look. Here are my reports. Okay, right. So this is running from 9:30 to the close. Well, it's a similar result with this algo. It's not doing too well after 2 o'clock. So I would do the exact same thing. So I'm going to come over here. I'm going to turn it off. I don't want it to run, and this is just fine with me, right? The longer you're in the market, the longer you've got risk. I'd be just fine. Whoops, let's get you off. I'd just be fine closing all of this out. So it's closing at 2 o'clock. Now, what does that do for my result? I'll give it a second to tally as it's making that change. Let's push you off for a second. So I've got a higher number here. The win rate here is the win ratio has gone to 75.9, 26.48. Pretty good net profit here, but look at the beautiful, right? For such a simple algo, right? Many people, they think, oh God, it's got to be so complex, and I don't know if I could get much simpler than this. Oh, I don't have volume on here, but it's using the volume in the background, right? It's the same algo. If we look over here, it's still using volume is greater than or equal to the volume of the previous bar. So it's still factoring in. That's worth noting. If you're using something in the algo, it does not have to be on the chart, right? The ASP will read it regardless of whether you have it on the chart. I just had it on the other one for demonstration. So we come back here. Now we look at this with those after 2 o'clock out. Now that's a good looking algo right there. Profitable every half an hour of the day. There's no big drawdown. It's not spread out. That's consistent. So I can anticipate that the Monte Carlo is going to be nice and tight, which I want to see here as well. Give this a second to pull up, right? So nice and tight. Bottom left to upper right. Max drawdown here stays very, very consistent within the range that we're targeting. Risk of ruin, very, very low. Right, so this is a great looking starting point for an algo, right? So let's see if I got everything covered. I think we do here, right? So we come back to the optimization. Sharpe ratio is one. Often I'll run both of them. I might do net profit or daily net profit in the Sharpe ratio, see if I can improve it. I don't want to discourage you from testing any of these others. I will tell you, I ran it for return to drawdown. It's terrible. just as a point, you're going to get different results from each one of these. So it's a matter of tuning in, fine tuning down to the one that's gives you the result that you're comfortable with. I find the net profit, daily net profit, and the Sharpe ratio are the three that I use the most often. So I'd encourage you to consider those. And with that, I think we come back here again. If any of you want this here, it'll be in our Discord. I'll put it in the free section here. Again, this couldn't be any simpler, right? Many of you already have the OBVM because I've used it in other ASP videos that I've done as a demo, right? It's just a nice, if you're using, often I'm using tick bars, right? So I want something that's going to be representative of volume, right? Up, down volume will be useless, right? Because it'll be the same volume all the time. So that's a pretty good looking result, right? So I don't think many of you would be disappointed with that result. And fees are, what do I got here? 778. So the fees are lower here. Number of trades is still 16. Average number of average number of trades here is lower. It's down to 12. 16 days. Excuse me. I had my eye on the wrong spot. Average win 32, average loss 45. It's not great, but biggest winner 253, biggest loser 173. I can live with that. The Sharpe ratio is over 1, right? So 1.27, very good. And again, very high win rate. So this is a very, very tradable algo. It's always a good idea to go through the trades. Here you see another example of something where it's, why would you sit through that? Look at this, comes within almost a tick of getting stopped out. Ultimately, right, it gets out here. So with a smaller lot, it's a loser, but it's smaller as a result of that. Now, again, you can tweak that, but if you start tweaking it, you're not trading this algo anymore. You're trading something else. And if you start fussing with it intraday, well, now this becomes meaningless. You got to let it do what it's going to do, right? And sit through that if you want that result, right? If you want to aspire, well, if you're hopeful to get a result that would resemble this, remember, right? The back-tested result may not be what you experience in live trading, but it's a very good reference point that you're on the right track. How do we think of it that way? And then again, my suggestion would be every 2 to 3 weeks, I'd want to re-optimize and see based on volatility changes or just in general to stay current to the market's volatility. I would re-optimize every 2 to 3 weeks, just a friendly suggestion, and see what that result looks like. Okay, so there's 36 minutes. That's probably long enough, but I think we covered most of the key points here on the optimizing here. Be sure to take advantage of what the reports will tell you and what Monte Carlo will tell you, and do a little experimenting here on your own. Remember, the only number that matters to you trading prop accounts is max drawdown. So that's the first thing to look for if you're running an algo. Now here, max drawdown percentage, we look here, that's there. Right, that's the first couple of trades were losers. So don't be deterred by that percentage here. Make sure it's in perspective to what you see throughout the course of the day. The other thing that you can use to kind of tweak and look for, you might, if you had an algo that had a big drop down in the middle of it, and you're like, oh, what happened there? Maybe that's something I can work with. If you click on it, it'll take you right to the trade. So in this case, I can see right here what was the big loser, right? So this is right at the open, it went long, and then it went all the way down and took the stop here. So what's my loser? 173. What's my biggest loser? 173. So there is the biggest losing trade is right there, and you can see why. Okay, right. So do I want to not trade at the open? Again, I would encourage you to not be deterred by that, because again, look at the results over time. Is that a bad trade? Yeah. Could you have gotten out sooner? Yes. Here's another one, right? You might look at this and go, oh, what a piece of. It's buying at the high and selling at the low. Well, in this particular case, yes, but over time, let it do what you've programmed it to do. Is that loser going to be a day killer? Well, you are certainly missing trades through the course of the day, right? If you're still sitting in that one lot as you roll through all of this. You got to be careful of that in the context of what matters is over time, right? That's the advantage of working with an algo like this. Yes, there's going to be some lousy trades. Absolutely. And you look at these and go, oh, I got to tweak it. And you might look at that and say, well, I got to tweak that. I got to make some changes because I don't want to ever see that. What you're saying is that's not good. That result is not good enough for you. This result is not good enough for you. Oh, that might be the case, right? Well, so then you can get to work as kind of tweaking this. Maybe you want trades that are in the market for less period of time. There's almost no limit to what you can do with this, right? So you can start tweaking that, and you might bring over here, go to your logic, and then say, okay, I only want trades that are in the market for nine candles, no more than that. Well, that's going to reduce. You do something like that. Well, that's going to reduce something like this that sits through all of these candles, and something like this that sits through all of this. But that may not get you that result. Right? You'd be surprised. You might look at that and think, oh, well, I'm just going to change it. So it's not, I'm going to say, don't be in the market for more than 10 bars. Is the result going to look that good? You might be surprised. Okay, so a few ideas to work with, and hopefully that's helpful to those of you that are just getting started with the optimizer. Good thing to run in the background while you're doing other things. Okay, with that, I'll wish you guys well, and I will have a couple of links underneath this for you. Of course, the link to get to our website if you want to trial ASP. We give you a 7-day trial, just like all of our indicators. And any of you, if you can always go to our Discord here if you want this exact algo to start playing with. This can be a good starting point. I'll put it in the Discord underneath this video. Okay, guys, with that, I wish you good trading. We'll catch you on the next one.